please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good afternoon. Welcome to Halftime Report. It's 12 noon. We're halfway through the trading session. I am Reema Tendulkar. With me is Nigel D'Souza, and markets are hit by a cocktail of bad news. For one, there's clearly panic in the entire NBFC housing finance markets up on the back of tighter liquidity conditions, perhaps a fallout of the IL&FS issue. So that is one issue. Secondly, if you look at the international markets, most of Asia is shut, but you've got the Hong Kong market trading, and that's down close to about 500 points, a cut approaching close to about 2%. So that's also weakening us. And finally, you've got worsening macro situation. So crude is now extended its rise to $80.5 per barrel. And secondly, Rupee too has deteriorated. So Rupee opened around the 72.5 mark. But as we speak, the Rupee is now at levels of 72.7. thereabout against the dollar. So clearly, risk aversion is running high in the markets. And if you look at the way we've collapsed, I guess there is no tangible bad news in a Bajaj Finance. But today, Bajaj Finance is down 7%. And considering that it hit its 52-week high or a lifetime high just on the 29th of August, which was a level of close to about 3,000. So from there, it's been a 27% fall seen in Bajaj Finance just purely in the month of September. So valuations were rich for most of these NBFCs, and now money's been taken out left, right, and center for these markets. So we've breached, Nigel, that intraday low. So we're at the low point of the day. I guess the next marker will be Friday's low, which was a level of, I think, 10,866. So we're about 150 points away from that.
That's right, Reema. The macros weren't looking good for us. And I'll give you one more negative. We're in expiry week.
Yes,
so if you're seeing a cut of close to around 500 points on the index, the bears, they'll be feeling very, very on top of this after having two series where the bulls rejoice 500 points in every series. And in fact, towards the end of this series, if we don't see a recovery or we don't see a fight, then in fact, we could have a rather ugly end to this series. So just keep that in mind as well. Friday's low of sub that 10,900 level, that's going to be the most crucial mark. And if you look at the call writing, 11,200 call added more than 10 lakh shares. 11,100 call added nearly around 6 lakh shares. Between those two, it's nearly around 17 lakh shares. And, Reema, we're talking about India Bulls Housing Finance, Bajaj Finance, Bajaj Fin Service. I don't remember the last time I saw HDFC down close to around 5%. Now, that's a big heavyweight on the index. If you pull up a contribution chart, I'm pretty sure that bulk of today's fall will be just because of HDFC. 4.5% down on HDFC. Everyone wanted to buy it at higher levels. Suddenly, that one is struggling. A contribution chart will tell you the picture. HDFC single-handedly has contributed to nearly around 30-35% of today's fall. Clearly, in fact, big profit booking in Friday's trading session. Some of those stocks were trying to hold one end up. Today, they come in for some big selling. So let's keep that in mind. And we're at the low point of the day.
HDFC will get negatively impacted if indeed there are tighter regulations on curbing the NBFC exposure to real estate, particularly the loan against property market. So if that comes through as is feared in the market, then HDFC clearly will be negatively impacted.
All right, we'll talk about that and more. First up, running you through all the top stories. The market continues to sink despite assurances that RBI, SEBI, as well as the Finance Ministry remain steady to step in to control the IL&FS fallout if required. Banking, financial and auto stocks are under pressure. The MidCap index underperforms.
The managements of Diban Housing, Repco, Muthoot Finance confirmed that they're not facing any financing problems. Credit Suisse expects the mutual funds to increasingly reduce exposure to NBFCs.
And worsening macros and also weigh on market sentiment. Brent crude prices back over $80 per barrel and the rupee falls over 0.5%.
Tata Steel is set to acquire Usha Martin Steel business. Tata Steel stock is under pressure as the street remains nervous about the company being too aggressive for Indian assets.
And Yes Bank to deliberate on Rana Kapoor's future role and the search for a new CEO at their board meet tomorrow. That's a CNBC TV18 exclusive.
Okay, back to the markets then, as we've been highlighting that 11,000 mark on the Nifty is on the verge of being breached on the downside, so just about 15 points higher compared to that level. Look at the way the midcap index has collapsed. So clearly there is a lot of panic and mayhem there. The midcap index is down more than about 500 points, with the index down close to about 2.7%, and that's because of the big story, on the NBFC and the tighter liquidity conditions, which have impacted the sentiment. So let's take that forward. NBFCs continue to fall in trade on the back of the IL&FS liquidity crisis. The RBI, SEBI have issued a joint statement saying that they're ready to step in as and when required. Additionally, the RBI has called upon IL&FS shareholders for a meeting on the 28th of September. But that doesn't seem to have calmed the market nerves. To discuss the impact in the sector and the company itself, Kailash Baheti, the CFO of Magma FinCorp, joins us on the phone line. Mr. Baheti, first, if you could just tell us, for Magma FinCorp per se, what is the extent of market borrowing? What percentage of your overall borrowing comes in from the market? And the total CPs outstanding or commercial papers?
Good morning.
Good morning.
I think, yeah. So, we have a total AUM of about 16,000 crore. Out of the 16,000 crore, we have roughly about 3,500 crore rupees of securitized book, where the collections is matched to maturity of the borrowings.
Okay.
Out of the rest of the book, we have about 66% as at end of Q1 from bank borrowing.
Okay.
23% from debt market, and 10% from other sources, which would be pref capital or sub-debt, etc., etc.
The remaining 10%, sir, from where?
From sub-debt and other long-term borrowings.
Okay. All right.
Yeah.
If you could give us some clarity, sir, what is the current cost of borrowing, in the last quarter, and what was the average in the last quarter? And currently, if you had to go and borrow money, what would be the cost be?
So let me give you a few more data. First is that since we have very large part of our borrowing from banks, which is about 66%.
Yes.
The bank borrowings, of course, are continuing for many, many years. Some maybe 20 years, 10 years, 15 years, etc.
Okay.
We also have significant amount of borrowings, credit lines available from banks, which are not utilized and which are not part of this 66%.
Okay.
Over next 3 months, our amount which would fall due for repayment from the debt capital market will be about 1,400 odd crores.
Okay.
Against which we would have about 1,700 odd crores of banking lines available.
Okay.
So practically we have nothing which is not covered by banking lines.
Okay. So what you're trying
the second point,
yeah, go ahead.
Yeah,
sorry.
the second point, and this is very important point, and this point is probably not correctly understood, is that for NBFCs, one of the significant sources of funding is securitization, about which I talked. And when we are today getting a lot of offers from the mutual fund industry for securitization. And securitization is, of course, matched to maturity of the underlying contracts. However, securitization, the cost is a little higher, about a percentage higher. If for any reason, if the mutual fund industry becomes a little credit risk averse and, does not give money by way of CPs, they would definitely continue to give by way of securitization. And my guess would be, while CP rates may go up a little higher, the securitization rates ultimately will probably go a little lower. That's because the securitized paper is AAA rated and also has first loss and second loss backup, and therefore there is no chance, or literally no chance, of a default there. And if that market picks up, if the CP market goes down, that market is bound to pick up. We are one of very significant players in the securitization market, and if we do not get the CPs, then we will get the same amount by way of securitization.
Okay, but do you anticipate that there will be some risk aversion from the debt mutual fund guys to fund your CPs, and therefore you will have to depend more on securitizations, which will in turn push up your cost of borrowing? Is that the likely scenario you see playing out now, sir?
while I do not see right now the scenario or the sentiments are such that people, when you would, say that we do not see any risk, people will not believe. And therefore, I would also tend to go with the flow, and I would say probably there would be a slight increase in cost of funds in the very short term.
Sir, let's get to the point. What is the cost of funds?
Our blended cost of funds is about 9% today.
Is about 9%.
And you said you expect a slight increase in your cost of funds. So from 9%, how much could it increase by?
We have been all along saying that given the rate hikes by the RBI and expected rate hikes in the coming few days, for the year, we would expect our interest rates to be at around 9.25%. So a 25 basis point increase from here.
Okay.
All right. So if you could tell us about business then for this year, what kind of growth are you looking at? And, are you on course to do that?
Yeah, we are looking for a disbursement growth of about 25% for the year.
Okay.
And that would lead to a AUM growth of about 15% by end of the year. This is the guidance we had given earlier, and we continue to maintain the same guidance today.
Okay.
Okay. Sir, it appears that these debt mutual funds, which have been funding so many of these NBFCs and housing finance companies, are now increasingly getting risk averse. And they are trying to bring down some of their exposure to companies in the NBFC pack. Have you been approached by any NBFC to sell your paper, in turn asking you to buy your own paper so that they will reduce their exposure? Has that happened?
No, that has not happened with us at all.
Okay. And what you're categorically trying to tell all the viewers is that the company is not facing any asset liability mismatch, right?
Absolutely.
Okay. All right. Thanks so much, Mr. Behati, sir, for joining in and giving us those details. So no concerns for another management then coming on the channel and telling us that. But
the market is telling another picture,
we have gone down, we've breached, I think, that 11,000 odd mark on an intraday basis. So that's pretty important. A lot of stocks that were holding in the green, now they've taken a U-turn. Stocks like Hindalco, Tata Steel, some of those metal stocks have come in for selling pressure. But we move lower when a couple of those heavyweights move lower. And HDFC, that's the sore point today. That's down nearly around 5%. Nothing really gone wrong out there. But that stock has seen selling pressure. And if I'm not mistaken, in the last couple of months, post that international issue that they did, post that the stock has been a big underperformer. Pull up the contribution chart. You'll see HDFC, that's dragging the index. That's down close to around 5% odd. Anuj joins us as well in this studio. Anuj, you had warned us in the morning. It's not looking good at all. And, any kind of bounce is being sold into as we speak.
Yeah, as we discussed in the morning, Nigel, if Friday sort of worried you, then you are in for something worse. Look, the market goes through phases and ultimately does a bit of a mean reversion. This market went through a phase where, from the July low, you had that 1,100, 1,200 point rally. More than that actually played out. And now the market's giving up. It's given up almost 60% of that move. It topped out at a historically important put-call ratio of 2. Triggers came later. The warning signs were there. Now we are at 1.11 on put-call ratio. The last round is always the most crunching one. Perhaps we are going through that. And if, anecdotal evidence, because the greed and fear factor would not change. So perhaps if you approach a put-call ratio of 1 or below that, triggers would come at that point again and the market will bottom out. We'll find out, of course, with hindsight. But right now, today is the kind of market where, the indications were there that, and there's nothing wrong in, shorting a market or trying to make money on the short side. If the market's indication is that that's what it's doing. The way HDFC is falling today, 5%, and the way Bajaj Finance is fallen today, 8%. I think this whole theory about how much lower can a stock fall, especially how much lower can a blue chip stock fall, I think this theory is getting out of the window now and is being smashed. In market, bull markets know no highs, bear markets know no bottom, and that's what's happening right now. Obviously, there's a bit of a fear factor in the market. Post 11 a.m., there was this margin issue as well, which would have triggered, and you have to read the screen. The screen is telling you that the market has become extremely weak.
Yes, absolutely. And now that 11,000 mark on the Nifty has also been taken on the way down. The next level to track will be Friday's intraday low, which on the Nifty at the spot level was 10,866. Ashwini Gujral now joins us. Ashwini, the Freaky Friday has been followed by a manic Monday. What happens from here on?
Well, you're getting big bang for your buck. I mean, if you know what to do, your profitability is, shooting through the moon. My sense is, taking a simplistic view, this low, that low, is not important. What is important is the last 2 years, inflation was low, rates were lower, rupee was, stable. That has changed. And till that reverses, financials will keep seeing selling, and they will be sold to the point where they become so attractive that things come to 2 times book and 3 times book, and people go underweight, and all portfolios get loaded with IT, pharma. This is that kind of fall. This is not your 10-15% walk in the park type fall which will get recovered. You look at the macros today, they are worsening further. Maybe this correction can be over in case crude falls below 70, in case rupee appreciates to 67. How likely is that immediately? I don't think very. It's a weak market. It does not need too much of a push to fall. Even if this IIFL issue gets sorted out, this is throwing entire kitchen sink out, as if nobody needs financials anymore. I mean, this would have happened anyway. But we have just accelerated the fall. We've fallen, what we would have fallen in 20 days, probably in 3 days. So that way, this is a derating of financials, which was continuing even before this event. And don't be cute that this is blue chip and, FIIs own that, and, they can sell. And later on, maybe once macros turn, they'll come back to buy. But to buy today, see another 30% decline and think you have a blue chip, you are still losing money.
All right, Ashwini, thanks so much for that. Well, Anuj, at the start of the series, the total open interest was the heaviest we've seen since February. And even in February, we were getting into a very gung-ho phase. The FIs, they were net long. The long positions were the highest that we saw. Similarly, at the start of this series as well, as you mentioned earlier today, we had 2 series where you had 500 points on the Nifty itself. In the July series, as well as, in the August series. And in this series, we have given away 500 points, and we've given majority of that away just in the last 6 trading sessions. We were holding around that 10,400 odd mark, and that's gone out of the window. And in the last few minutes, just take a look at the way we are selling. We are holding below that 11,000 odd mark. Clearly, not great signs.
I'll just make one more point here, Nigel. If you look at the MSCI indices, this month you started to see a big decline in MSCI Emerging Market and MSCI Asia. That has more or less actually now recovered. In fact, the MSCI Emerging Market is now down only 0.7%. Asia ex Japan is down only 1.3%. But MSCI India, measured in dollar, of course, all of these markets, is now down about 9%. What that has done is that it's brought us back to the year-to-date performance of the other emerging market. I think till the start of this month, we were the best performing emerging market. What this has done, again, the concept of mean reversion, what we have done is we've gone back to what most of the Asian and most of the emerging markets have done. And I think just to carry forward the point that Ashwini was also making as well, if you're an investor, perhaps, you could be looking at now, trying to add some good quality in your portfolio. But if you're a trader, and then, you have to respect the screen and the market's message, which is that it's quite weak. Kotak, I think the way it's falling, and HDFC Limited, along with Bajaj Finance, overvaluation is as much a sin as any in the market. And now, you're seeing quite a bit of correction of that. IT is holding on. Let's see for how long it can do that. Because keep in mind, it's not a fresh rally in IT. It's, that also has had a big rally. In fact, if Ashwini is still with us, Ashwini, IT index is still up 2.5%. You reckon that would also cave in? Or is that still a space where, you could hide?
See, that can hold on because rupee is collapsing. Now, imagine if IT was also down 200 points, where would be Nifty? So you need some counterweights, and that will happen. But the intelligent trade is on the short side. I keep hearing what can go up. Why are you looking for things to go up? If 1450 stocks are going down, 200 are going up, where are your odds?
All right.
So, Ashwini or Anuj, let me ask this question. What could be the extent of the fall? Now, from the highs, which is 11,760, it's actually been only a 6.5% fall. Yeah. We've seen crises way back in 2008, 2013, when the markets have halved and fallen even more than that. So it's just that this fall has come, very rapidly, and it was a ferocious fall in a span of 2-3 days. But it's actually only been 6.5% from the top.
Yeah, exactly. And see, the one mistake which we should not make right now is to look at levels as sacrosanct. This is not that kind of a market. That market is when, you're going through phases where the market's not moving much. This is a market where it's making a bit of a macro move, and market will overshoot on the way down. Just like the market overshoots on the way up, it will overshoot on the way down as well. 11,000 is now, of course, well gone for the Nifty. If you are someone who wants to look at level absolutely, then the 200-day moving average is 10,750. Normally, the first test of 200-day moving average is successful, but that's still about 250 points from here. So, if you're absolutely, careful about the levels or want to know a level that comes to your mind, it's perhaps 10,750. Also, let's not forget this is expiry week. In expiry week, it's all about, who has the momentum. Momentum is firmly with the bears right now, and that's why, intraday, all the rallies are being sold into. What you need right now is something which will scare the bear. Like, we had on the Rupee, when there was some statements, and then all of a sudden you had seen that 1.5 rupee move. What you need right now is some kind of a scare for the bear that these things could change as well, and these things change, of course, on a dime. But for now, till the time that happens, this market is weak. Make no mistake, and it's got a bit of a Murphy's law playing for it. You have the crude at 80, you have Rupee where it is, and you have, of course, this bit of a freeze which is there in the debt market. That's also not helping.
All right.
Well, the statements didn't scare the markets, at least. Statements from the RBI as well as SEBI that they're jointly watching the market, they're ready to act. That hasn't scared. We'll wait by to see when they act and what the measures are and if that will scare.
Well, just a quick word on TCS. The buyback closed on Friday. That was something that was putting a bit of a lid on that. It was at around 2,100 and hovering around that level. Now the stock has moved to the high point of the day. The buyback closed on the 21st. Even in Friday's trading session, the stock ended with a gain of around 1.5% in an otherwise wobbly market. And now, in fact, it seems, that stock is taking off on the back. That buyback that was there, buyback price was putting a bit of a lid out there. But let's get in, reaction in terms of what's going on in the markets and what's the sense in some of those dealing rooms. Dipan Mehta, member BSE and NSE, joins in. Hi Dipan, thanks so much for joining in. Your sense of what's going on, any kind of margin call triggers that have taken place at around that 11:30 odd mark, or do you think that the market is just aligning itself to the weak macros that are serving as headwinds over the last few trading sessions?
I think the weak macros we've been pricing in entire through this month. We are all aware of what the weak macros are, the rupee depreciation as well as interest rates going up and all the other various issues. So there's nothing new as far as the macros are concerned. But the way the NBFCs are falling today, I think there is a deeper issue in their entire funding ecosystem, which needs to be explored a bit more closely. And in my experience, usually the stock price falls first or the sector falls first, and then the news comes out gradually as to what is exactly happening in that sector. And my sense is that over the next few weeks or so, we should expect some bad news coming from the NBFCs, especially regarding how they are funding their assets and their loan growth. And you could have some hiccups over there, marginal or temporary increase in interest rates, I think, which the market is doing now.
Okay, yes. Look at Edelweiss now, by the way, down 10%. This was one of the stocks that we were watching out for in the morning. In fact, the entire NBFC space has seen a bit of a collapse. Basant Maheshwari is also with us. Basant, good afternoon. So, greed and fear playing out. Obviously, 2 months back, we saw peak greed. Would you say we are at peak fear right now or not quite?
Fear, Anuj, I think the fear is multifold right now. First is the ILFS issue has to get solved. I mean, there's a date for 28th of September, but you have to trade for 4 full days, and then God knows what's going to happen on the 28th of September. If you remember in 2008, when there was a global issue, the entire globe got around and we used to cut interest rates. The entire central banking community, I mean, from India to America to Russia to Japan, everybody used to cut rates together. So we need something like that between the various regulators right now, and that includes all the facets that move around the stock market, because markets have to trade every day. And of course, everything will be fine because, I mean, there's all this talk about the financial sector blowing up, but then financial sector can't blow up. The government cannot let it blow up because one sector leads to another and the another leads to another. But the only problem is the collateral damage it causes, because when prices fall, speculators unwind. When speculators unwind, there are margin calls and, so on and so forth.
Okay. Basant, good afternoon. Have you got calls from your clients to reduce their equity exposure? Have you been selling?
No. We have got no calls, and we don't get calls because the clients who are with us for a long period of time. They understand what we want to do, and of course our stocks have fallen. How can you say that your stocks haven't fallen? But then what we are normally doing right now is waiting for mid-October and end October, and I'll tell you why. Because that's the time our companies report results. So we're so sure that once the results come in, things should be fine. But then time has to be spent.
All right, Basant, but you don't believe it's a time to be brave, to go out there and buy some of those blue chip stocks, which have corrected 10, 15, 20% as well from the recent peak? It's not the time to be brave?
Absolutely. Without a doubt, you have to be buying at these times. But the point is, you have to buy the headline stocks. You have to buy the big names, the high quality names, because most of them are already down 20-25% from the top. And once a stock is down 30%, it doesn't fall normally unless there is a defect in the fundamental attribute of that business. And most of the businesses in the top end are like that. So I think right now it's the time to be looking at and buying stocks if you have the cash. But it's easy to tell somebody to go and buy, because if he has not bought it till now, I can very well tell you he wouldn't buy it till the market goes up again.
Okay. You referred to 2013 when we saw concerted action from the regulators. Are you comparing the IL&FS default to Lehman? And do you believe that once the IL&FS issue is resolved, perhaps there is a bailout, the markets will be back to where they were? Everything else will resolve itself?
I'm not comparing it to Lehman. What I said was, when the different countries across the globe can get together, why can't different regulatory agencies get together? That was the only plea from my part to the different regulatory agencies, which is the Ministry of Finance and the RBI and the SEBI, because they have done their bit. But there's something else about a big bang approach. One stroke, for example, the RBI could do an OMO, release 5, 7, 10, 20,000 crores in the market and say, here's the liquidity. Now tell me where's the problem. You need something like that. And I'm too small a guy to be telling everybody what to do. But, we just speak from experience what has happened.
Okay, so in the last few days, what have you done with respect to your portfolio? Have you bought? If yes, what have you been buying?
No, we have not done anything basically in the last few days. Okay. We've been just looking at the screen and thinking, okay, this too shall pass.
All right. Basant, you made a point back on social media that the rupee weakness, that's partly nullifying the growth that we are seeing. I think the point you made was that if India is going to be growing at 7 to 8%, the rupee is depreciating 4% odd, then in dollar terms, we're not growing much. How worrying is this rupee slide? We're approaching that 73 mark again.
I think that comment was taken out of context. What I said was, if you convert everything to dollar terms, you should, because there's a risk premium that a foreigner carries when he comes into an emerging economy, right? Into a country like India. Right. So he wouldn't come here for 2, 3, 4, 5 percentage points. He comes here to make a lot more. And I think that's what is... So our problem is twofold. If America grows 3%, nobody wants to come here. If America grows at 1% or is in a recession, then in any case, people want to withdraw money. So for us to grow and to be having that FII flows, we need a regulated growth in the advanced economies, which is very difficult, but that's been the experience. If America grows 1.7, 1.8, 2%, we are fine. But the moment America grows at 3%, those guys say, hey, wait a minute, our Google is growing at 25%. Why should we go to India and buy a rupee asset which is growing at 20, 25? So I think we have a twinfold problem. And right now, the problem will get aggravated. There's the crude thing coming up. And there's, till now, the global markets were doing well. We were not doing well. Now, from today onwards, the global markets are on a tailspin again. So it's become difficult. I think everything will get sorted out, I can tell you. But then, you have to spend that time out.
Okay, Basant. Thank you very much for your time this afternoon. Dipan Mehta is also there with us, and Saurabh Mukherjee of Marcellus Investment will also be joining us in just a bit. Dipan, have you taken risk off your portfolio? What are you recommending with stocks like an HDFC Limited or a Bajaj Finance?
No, I think we're also just kind of staying put at this point of time and waiting for some kind of a bottom to be formed. And seeing how much deeper it can go. I heard Anuj say that, markets sometimes, tend to go on the extreme. On the top also was an extreme, bottom also will be an extreme. What that point is, nobody knows. But we just need this market to stabilize before we start putting money to work. Do keep in mind that it has been a bull market for many, many quarters and months. And it's not that everybody is sitting on a huge deal of cash to deploy in the market. Whatever little is there, that I think more or less investor psychology is to conserve and wait for things to clear out.
Well, Deepan, you have told us numerous times that your picks have been those private sector banks. You don't like the PSU banks, and you don't mind paying a higher multiple for some of these NBFCs as well. Now, we are seeing some selling pressure out there. What would your advice be? Because that trade worked out perfectly well in the uptrend.
Yeah, absolutely. I think, the first on the buying list will be the quality NBFCs, which we are already owning, like, say, a Bajaj Finance or a Cholamandalam or even an HDFC for that matter. Some of these have come to attractive levels, and one needs to keep in mind that these NBFCs have been around for a long time, and they have weathered through many such major and minor storms. And I think this one also they'll be able to weather quite well. And once things settle down, you will realize that that's where the maximum and the highest secular growth is, and the compounding benefit is coming mainly in the NBFCs other than any other sector at this point of time. I know that many analysts are bullish on pharma and IT, but these sectors have become very volatile when it comes to their earnings, and difficult to have visibility or predictability of their earnings, the type that we have in the NBFC sector. So I would just say that one needs to just wait and watch.
All right, Deepan, thanks a lot for your time. Saurabh Mukherjee of Marcellus Investment is also with us. Saurabh, good afternoon. As we speak, this month Bajaj Finance is down 23%. I don't recall when was the last time I've seen something like this. Kotak, HDFC. Your thoughts on what's going wrong with financials?
I don't think there's anything specifically going wrong with financials. I think we just got too optimistic about wholesale market funded lending models. We're still a country with per capita income of $2,000. We can't run a financial system entirely off wholesale funding. And fund managers have got too excited about wholesale market funded banks, NBFCs, HFCs, and pumped their valuations to ridiculous levels, 4, 5, 6, 7, 8 times price to book. So correction was long overdue. What precise reason the correction happens, whether it's ILFS, whether it's the 10-year bond yield, the rupee, in a way is somewhat secondary. You can't logically say that 40% of the weightage of the Nifty should be financials. So financials have been significantly overvalued for I would say, good year and a half, and a long overdue correction is underway there.
So do you expect more pain ahead for the NBFCs? Have we, corrected ourselves in terms of the overvaluation, or not yet?
I think we haven't even seen the beginning of the correction, if you ask me.
Lower do you think an HDFC or a Bajaj Finance or any of these blue chip NBFCs can go from here?
I don't think there's any point in worrying about stock-specific stories at this juncture. I think there's a long way to go. We had a macro, as I said, we had a macro trend wherein cost of funding for NBFCs fell from the 3-month CP fell from 11 or 12% in September 13 to almost 6.1% last summer. Summer of 17. So, if you have the cost of wholesale money almost halving in 4 years, obviously, wholesale funded lenders took off. And now that you're reversing the funding cycle, both on the domestic macro becoming healthier and global liquidity tightening, as you reverse the funding cycle, we will see a sustained correction in financials in totality. I wouldn't even just single out 1 or 2 NBFCs or HFCs. I think there's an overdue correction in the sector as a whole, and I think it's premature to get too stock specific at this juncture. Yeah,
in fact, Nigel, reimagine the last bar on Bank Nifty is 100 points. Once again, just pull out the intraday chart on the Bank Nifty. It was down about 460, 470 when we're talking. It's now down almost 600, and that's the Nifty Bank 584 points down. And I think we are now very close to Friday's intraday low. That is what you were looking at. So really big decline now. So,
Saurabh, just coming back to you, what could really turn sentiment? What would you like to hear? Crude is beyond our control, and President Trump as well, whatever he said didn't make much of a difference. The OPEC countries, they're saying we are going to do what we want. Crude is not in our control. But what are the other positive sentiments that can can prevent this fall from deepening even from here? What would you like to hear from the RBI, from SEBI, from the government of India?
So I think before I come to RBI, etc., I think given that there's a pretty full-fledged trade war now getting underway between China and America, there is a possibility, I would say, that crude does correct as the trade war escalates. If global growth starts slowing down and crude corrects, I think that is a major positive for India. We shouldn't rule that out.
Okay.
That we could get a positive a kick from crude if the trade war conks off crude. But coming back to matters closer to home, I think given how much the 10-year bond yield has risen, given the extent of pressure on the rupee, I do think everybody is better off if RBI moves to clarify its stance on interest rates. It's reasonably clear that we are set for meaningful hikes, and rather than us having to sort of wait till October, I think it would help if the central bank came out and cleared the air. There is clearly a defense required of a currency which is falling almost 1 rupee a week, and I think the central bank's clarity on that will be helpful. It is also helpful to know to what extent will RBI mop up liquidity in order to prevent the rupee, because one of the reasons that's spooking investors and financials is liquidity is tight and everybody is fearing it will get tighter as the central bank mops up more liquidity. So clarity from the central bank will be useful, and the other element that I think everybody will benefit from is some reassurance that ILFS's commercial paper will be backstopped by either the RBI itself or one of the larger PSU banks. CPs sit inside liquid funds, and liquid funds are not intended to take on this sort of credit risk that ILFS poses.
Okay, all right. Thanks so much, Saurabh, for stopping by and, in fact, giving us your quick take on the markets. By the way, as we speak, we moved to the low point of the day. Maruti Suzuki, that's moved to a 52-week low as we speak. 7,600 rupees on Maruti. Just in December last year, just around 9 months back, the stock was at around 10,000 rupees odd. It was holding between 9,000 to 10,000 odd. The stock moves to the low point of the day. Fresh 52-week low coming in on Maruti. But let's get a revised trade come in from Ashwini Gujral, and we have Prakash Gaba as well. Ashwini, tell us the stocks that you have for us and any kind of levels. The short trade has been working out on the Nifty. Anything more you want to fill us in with?
See, today we started with the NBFC issues. Then, crude and rupee got on board. I think now it's probably the turn of global markets to, push their weight, because Dow futures are now down about 80-90 points. So even that could create further trouble. So even now you can get short on Nifty Bank Nifty. This is, a running train. So anybody who thinks that this is going to stop without any sort of intervention is probably not thinking correctly. Now that we are below Friday's low, more selling should be expected. Generally, right now we are about 180 advances to about 1475 declines. This sort of a day, which is a trend day, generally ends at about 50-60 advances to about 1600, 50-60 advances to 1500-1600 decliners. So I think a second round of selling should start here.
Okay, let's...
Having said that, India Bulls Housing is a sell with a stop of 970, target of 920. IRB Infra is a sell with a stop of 144, target of 132. And Tech Mahindra is a buy with a stop of 754, target of 780.
Let me just quickly put on board the European market opening. It's opened in the red, but the cuts are not very deep right now. So it's about a 0.25% fall in the CAC. The DAX is down about 0.3%, and the FTSE has a minor downtick of about 0.1%. So in the red, but not by a whole lot. Prakash Gaba is also here with us on the show. Prakash, your trades?
Well, Nifty so far looks weak, is stretched a bit. So if we get a bounce, those would be shorting opportunities. Only thing is stop needs to be slightly deeper, but looks like we'll close at the day's low here, closer to day's low. I have two stocks, both on the shorting side. M&M looks weak. Can see a slide to maybe around 880, 870 zones. That's a possibility. Its stop about 900, 915 should be fine on that. Titan is another stock, looks like it's breaking down now here. Possible target on Titan on the downside is in the vicinity of 730. Stop about 790 on Titan should be okay.
Okay, all right. Thanks so much for that, Ashwini, as well as Prakash. Well, we have bounced a tad bit, just 20 points from the day's low. We had moved towards around the 10,950. A bit of a bounce. More or less, we have been seeing from morning the trend has been any kind of bounce has got sold into. But let's get an insight into dealing room. What's going on there? Nimish Howe joins us, and he's going to tell us what's traded top. Nimish.
Hi, Nigel. So clearly there is panic, at least in the retail and HNI category. You can clearly see that on the screen as well. So that's clearly playing out. What triggered the fall is largely the NBFC fall on Friday, and that spilled over to the other stocks as well. So margin calls got triggered in the morning trade, so that pain was clearly visible in the mid-cap and small cap. And now it looks like there is lack of buying interest from the larger institutions. From a larger institutional point of view, given that many of the Asian markets are shut today, you're not seeing large volumes coming in from the FIs. And even within the DIs, it's basically moving from riskier assets to the defensives like IT and pharma. So there is clearly no buying support coming in the riskier names, the financials, NBFCs, housing finance companies, and for that matter, banks as well. So it's like a one-way trade on those sides, where some bit of buying is clearly visible in the defensive names like IT and pharma. So that's something which, again, from a technical point of view, I'm told if we decisively close below 11,000 on the Nifty, then probably we'll see further selling coming in, and that could impact largely in the mid cap and small cap. So watch out for 11,000 on Nifty very closely. But just one caveat, Nigel, that today's fall is not led by large FI selling. That's what I'm picking up, because many of the Asian markets are shut, the volumes on the lower side. So maybe the selling is more from retail, and it's on low volumes, which is dragging the stocks down. So that's the only positive thing to watch out for. But broadly, from a technical point of view, we are on the weak side, and if we close below 11,000, then probably we'll see further sell-off.
Okay, Nimesh, that's a very, very important point. Thanks so much for highlighting that. Most of the Asian markets are shut today, barring the Hong Kong market, which is why the FI flows could be a bit absent. But Anush, that brings us to the point that perhaps it's the DIIs which have now started selling in the Indian markets, and they were the supporters, right, up until now.
Yeah, but Rima, frankly, this, I have seen days when, like Friday, there was FI buy number and DI buy number, still the market was down. I have seen days when FI was sell, DI was sell, and the market was up. So, this flow business does not tell us, like Rhythm was telling us that day. There's a bid and an ask. There's a market order and there's a limit order. The ferocity of buying and selling at market order, which decides, you can have all kind of flows. But the point Nimesh is making is interesting in the sense that if you're worried that is this large selling because it's lock, stock and barrel selling by FIs, perhaps that's not the case. Yeah. But then, the gross numbers have also picked up. So, I frankly don't give that much importance to flows. For me, what the screen is telling me is always most important. By the way, just like we saw on Friday, there's an intraday rally playing out right now. And in fact, a bit of a recovery playing out in the market right now.
All right, so we have bounced close to around 50 points from the low point of the day. In terms of those FI flows, towards the end of July, the rupee went to around 69.5 odd. Everyone thought that, maybe at most, by the end of this year, we'll be at around 72. And that's why some FI flows started coming back, to our Indian markets. But from there, we are at 72.5 odd, and that's in a couple of months itself, and that's why the FI flows really haven't picked up. In fact, we've seen a lot of redemptions. Now we'll have to see in terms of mutual fund flows, what does that data throw up as well. But as Anuj said, for the time being, a bit of a pullback from the low point of the day. TCS is holding one end up, so that's pretty good news. And stocks like Bajaj Finance, that's recovered close to 2.5% from the low point of the day. Bajaj Fin Service as well has recovered a tad bit, and even Tech Mahindra Bank trying to recover from the low point of the day. Let's do one thing, slip into a short break. You come back, continue our focus on the markets as well as on stocks in the broader markets.
Welcome back. There's a sharp decline in the stock price of Bharti Airtel. So let's get that up for you on your screen. It's now down close to about 4%. The fall coming through just as we speak. For the markets otherwise, the Nifty is hovering around the 11,000 mark, a cut of about 1.2%. What's also creating additional pressure in the markets has been the rise in Brent crude prices above that $80 per barrel mark. Manisha Gupta joins in. Manisha, what's the reason for this increase in prices today?
Well, plenty really, Rima. And one, of course, has been the definite statements that have come in from OPEC and allies on the Sunday meeting in Algeria, where OPEC says that they expect the high crude demand for the month of October. The markets are tightening for the near term, and also that additional output will be demand-driven and not be influenced by prices. Add to that, you also have seen U.S. signaling preparedness to ramp up pressure in Venezuela. You also are looking at the U.S. inventories at 2015 lows. And then, of course, it has been been Iran sanctions, where we have seen, of course, the deadline being 4th November, but the Iran exports already have declined by 35 to 38%, with more numbers showing a further decline as we go day by day there. So that clearly has ramped up the crude oil prices as you can see them. But Reza Amanat of Argus Media now joins us to talk more about that. Reza, hi. There are more factors than one which are supporting the crude oil prices right now, holding above $80, nearly 2% of a gain. How have you read the markets today?
Yeah, hi. I think many people in the oil markets were perhaps expecting an OPEC decision on supply today, and I think they just misread what this meeting was all about. Obviously, this was just a ministerial monitoring meeting, which just, looks over compliance levels and tries to gauge whether the current strategy is working or not. And when OPEC came out and obviously did not announce any plans to increase supply and said that their current actions are enough to balance the market, and they see that inventories are still withdrawing. I think people were surprised that they didn't get some sort of indication that there's going to be more OPEC supply coming on the market. But of course, this meeting wasn't about that. But as you mentioned as well in your summary, there's other factors in the market, such as less exports out of Venezuela, Iran sanctions, which are affecting the supplies available in Asia. Those are very bullish factors that are obviously supporting crude prices at the moment. But
Reza, there also are reports from JP Morgan, Mercury, a warning of 1.5 to 2 million barrels being knocked off the market after Iran sanctions. Are you looking at that bigger number? And if yes, do you see any sense or any meaningful gap being filled by other suppliers? Is that another thing that you would keep an eye on?
It's possible. Iran was exporting somewhere in the region of 2.3 to 2.6, 2.7 sometimes. And it's possible at least, half of that was going to China and India. And if China and India continue to buy at the same rates they were buying before, then you could say that, well, half of that on average 2.5 million will disappear from the market, but at least the other half will continue to go to India. The only unknown factor is we don't really know if the Indians will, the state-owned companies will reduce purchases as part of a deal with the Americans, or whether the Chinese might decide to reduce purchases or increase purchases for that matter. So we can't give a definite number on how much Iranian crude will be lost in the market. But, with already Korea and Japan not getting any waivers, obviously everything they were taking is already not being supplied by the Iranians. So there is obviously going to be some tightening and, more demand for other similar crudes from the Middle East, so long as we don't know what the situation is and the Koreans and the Japanese can't buy from Iran.
So, Reza, one final question. I know you wouldn't give exact price view on crude, but with the kind of move that we've seen and other international bankers and agencies quoting numbers like 90 and 95 going forward, how much further bullish are you on crude prices from here?
It's at the moment we're in a situation in the markets where there is a lot of uncertainty. There is that expectation of tightness in supply because of what's happening in Venezuela, because of what's happening in Iran, and there is not that much confidence in whether the spare capacity available can be available over a long period of time, because we don't know how long these situations with Iran and Venezuela, for instance, can last. And any incremental additions to OPEC are coming from West Africa, they're coming from Libya, where production can be very erratic. So people are not really buying into this thing that we have this safe buffer, where the lack of Iranian crude can just be covered, by production elsewhere. And also the quality matters. It's not just about quantity. Iran is producing very, very, very typical, very specific quality of crude, which is medium sour and heavy sour, and so is Venezuela. And if you're taking away medium heavy sour, there's not that many producers that can produce like-for-like barrels. So that's it's being factored into the market sort of outlook as well.
All right. So the bottom line really is that there is more bullishness in crude oil prices from here.
Okay, all right. Thanks so much for that. Well, we'll slip into a short break on that note. You come back, we'll continue our focus on the markets and stocks as well. Well, we're off the day's lows, though. In fact, the Nifty is still down around 130 points as we speak. Close to around a 50-point recovery is what we have seen in the last 20 minutes. The stocks that are recovering really, Reliance Industries, that's putting in a bit of a fight for the bulls. And from the banking space, Axis Bank is the other one that's seeing a bit of a bounce from the low point of the day. The problem, though, is that the 11,200 call was very, very active. There's aggressive writing being seen over there. Then the 11,100 call did see a good amount of addition, nearly around 10 lakh shares being added there as well. And finally, now the 11,000 call as well, very, very active. So between the three strikes, the call writing has been very, very aggressive. Close to around 25 lakh shares have got added, telling you that any kind of bounce will, invite some selling pressure. It's expiry week as well, so keep an eye out on that front. Well, on that note, we'll wrap up on Halftime Report. You stay with us. Business Lunch comes up next.